Hey everyone, welcome to This Explainer. If you've ever looked at the stock market and just felt totally overwhelmed by the flashing numbers and the completely conflicting advice out there, well, it's probably because you're actually looking at two entirely different financial philosophies mashed together into one space. So, today, we are going to untangle them. We're going to build a crystal clear mental model of trading versus investing, so you know exactly how the mechanics of this market actually work.
Here's our roadmap for today. We'll define the Great Divide, break down the three core pillars of time, worth, and risk. We'll explore the harsh poker table reality of the market. And finally, we'll figure out which approach fits you best. Let's dive in.
Section 1. The Great Market Divide.
Okay, picture this. It's a massive dichotomy, right? On one side, you have the frenetic floor trader, sleeves rolled up, chugging coffee, staring at four screens trying to lock in a quick profit. And on the other side, you've got the white-haired guru, completely ignoring the daily noise, just patiently building a portfolio to compound over the years.
But here is the wild part. Both of these people sit down at a computer, pull up the exact same ticker symbol, and hit the exact same buy button. But that surface-level action, it hides a massive truth. They are playing two completely different games, and their underlying goals literally do not overlap at all. Let's look at why.
That brings us to Section 2, Pillar 1, Time Horizons.
Just look at the difference in holding periods here. It's staggering. A day trader might hold a position for literally seconds. Think about that, seconds. Meanwhile, an investor hits buy with the intention of holding for 5, 10, maybe even 30 years, just letting the asset mature.
And because investors are in it for the long haul, they aren't just crossing their fingers and praying the stock price shoots up. No, they're acting like actual long-term business owners. They are collecting regular payments of profit, called dividends, quarter after quarter, as their investment takes root and grows.
But right, time is really just a symptom here. So what is the actual root cause of this massive divide? When you strip everything else away, how do these two mindsets answer the ultimate question? What is a stock actually worth?
Let's explore that in Section 3, Pillar 2, Analyzing Worth.
Okay. Intrinsic value. This concept is the absolute master key if you want to understand the investor mindset. It is the true, underlying worth of a stock based on real things, assets, earnings, operations. See, while fear and greed make daily prices bounce around like crazy, investors believe the price will eventually settle right back to this true intrinsic value. So you can see the stark contrast in focus. Investors are looking at the factory itself. They desperately want to buy a healthy, functioning business. Traders, they're looking through a magnifying glass at the price line. Honestly, a trader might flip thousands of shares of a stock without even knowing what the company actually makes. They're just trying to exploit a short-term trend.
And because those business fundamentals just don't matter in the span of a few minutes or hours, traders rely on something called technical analysis. They read historical pricing charts, momentum gauges, and mathematical indicators. They aren't analyzing a business at all. They are analyzing the mathematical behavior of the stock itself to spot exploitable patterns. All right, Section 4, Pillar 3, Managing Risk.
Now, a trader mechanically caps their downside. They treat risk as a strict probability game. They use things called stop orders, which is basically building a hard brick wall to define exactly how much money they are willing to lose before the system automatically kicks them out of the trade. An investor, on the other hand, is more like someone stepping into a sturdy boat. They accept that the waves are going to get choppy and prices will fluctuate, but they ride out those dips because they trust the fundamental strength of the hull.
Which leads us to Section 5, the poker table reality.
Listen, if you are day trading from your living room, it is not a fair fight. Let's be real about that. You are competing against massive, heavily armed institutions with endless pockets, cutting-edge research, and automated algorithms that execute trades in fractions of a second.
It's literally like sitting down at a high-stakes poker table. Trading requires bluffing, hiding your intentions, and yes, while skill is absolutely a factor, chance plays a huge role. When you sit at a table with well-resourced professional opponents and supercomputers, the odds are rarely in your favor as an amateur.
Contrast that high-anxiety poker game with the quiet environment of investing. You don't need to outsmart a Wall Street algorithm in 3 seconds. Investing simply relies on planting a seed, stepping back, and waiting for the broad, gradual growth of the overall economy to pull it upward.
Finally, Section 6, which one are you?
Let's map everything we've talked about into one intuitive framework. The divide is undeniable. On one hand, you have traders who want short-term profits. They use technical indicators, and they manage risk with stop orders.
On the other hand, you have investors who want gradual appreciation over decades, relying on intrinsic value and broad market growth.
So, where do you naturally lean? You might be a trader at heart if you crave quick action, love reading price movements, and honestly couldn't care less what a company actually does behind the scenes. But if the idea of jumping in and out of the market totally stresses you out and you prefer building strong convictions about long-term potential, you, my friend, are an investor.
But here is the absolute best part. You do not have to trap yourself in one box. A highly effective strategy for a lot of people is to keep the vast majority of their wealth securely locked in long-term investments, and then use a small, dedicated slice of their portfolio to actively trade and scratch that competitive edge.
Now that we've completely demystified exactly how these two games are played, the power is entirely in your hands. So tell me, when you hit that buy button tomorrow, are you going to patiently ride the long-term growth of the economy, or are you ready to test your luck at the high-stakes poker table? The choice is completely yours. Thank you so much for exploring this with me. Keep learning, and I'll see you next time.